The rate of change, or ROC, is a classic momentum indicator. Momentum traders usually use this indicator to predict short-term trend reversals. ROC compares the current price and the closing price in periods ago. By calculating the percentage change, ROC helps to identify the strength of buying or selling pressure. The N value of ROC can be any number such as 12, 25, or 30. The smaller the N value, the more responsive the ROC is to price changes. Therefore, short-term traders tend to favor a smaller N value. If the N value is 12, we are observing the price movement between the current price and the price 12 trading days ago. How does ROC help make trading decisions? In technical analysis strategies, stock trends are analyzed based on ROC values, movements, and if a divergence occurs. 1. ROC values. Positive values indicate rising prices, while negative values below zero indicate falling prices. A high ROC indicates that the stock is probably overbought and is generally seen as a selling signal. On the contrary, a low ROC indicates that the stock is probably oversold and is generally seen as a buying signal. But as the range of each stock varies, a comparison with the stock's past volatility is necessary. 2 movements. The further away the ROC line is from the zero line, the faster the price changes. If the range of movement becomes smaller, the upward trend could be weakening. When the ROC crosses above the zero line, the buying pressure is stronger, which could be a buying signal. On the contrary, when the ROC crosses below the zero line, the selling pressure is stronger, which could be a selling signal. 3. Divergence. In most cases, ROC line resembles the price movement. If the ROC is moving lower but the stock price is rising to a new high, a divergence occurs indicating a possible trend reversal. If the ROC is moving higher but the stock price is falling to a new low, a price rebound may be possible. But a divergence doesn't necessarily mean a trend reversal. Therefore, it shouldn't be seen as a trading signal. If you want to use ROC to trade, you may find that sometimes the indicator changes too fast. The order is still pending, and you will need to place a new order. In this case, you can also combine ROC-MA to analyze, that is the moving average of ROC in a period of time.